Just wanted to give you guys the update of the market as it is this week. We've been filming these every week, so hopefully you're getting a lot of value out of them. So what we want to talk about today is market sentiment. So what we're seeing in a lot of the capital cities, including our own, is an increase in auction clearance rates. So they're higher than they have been in previous years. So what we're seeing at the moment is that's transferring into confidence, which is great. So it means that the buyers are out there and they're looking to spend. Traditionally, that's probably going to slow just based on the fact that we're getting into those cooler months, the middle of winter, and those auction clearance rates tend to come down. The reason that we use auction clearance rates, whether you're in an area that does a lot of auctions or not, is just based on the fact that it gives us some good data in terms of how many buyers are buying and how many transactions are happening, and it gives us a percentage so we can get a really good gauge on how people are feeling about the market, even if that's not really what's occurring in your market. So the sentiment at the moment is that the buyers are really happy and that confidence is following through. We're seeing that at an office level. So every weekend we're seeing lots more offers come in and people obviously feeling confident about buying. Numbers are roughly the same for the buyers. Sellers are a lot more cautious, so we're not seeing as much stock come onto the market. So the reason that we think the sellers are holding out at the moment is that they're looking for key moments, so they're probably waiting to see what happens with these interest rate cuts, just to see if it can make their move a little bit easier or if it's going to bring more buyers that might potentially stimulate a little bit of pricing, even though we're not seeing that at the moment. Obviously the serviceability buffer change, so APRA brought out some communication this week around their changing of serviceability percentages. So just to give you a quick snapshot of what that means is, previously APRA looks after the investment loan side of things with the banks. They have previously preset a buffer of serviceability, which means how much you can afford to repay on the loan. So they buffered up the rate to 7%, even though the current rate's at 3.5%, to make sure that you had more than enough ability to repay the loan if circumstances got tough. What they're realizing at the moment is that the cash rate's low, it's going to remain that, it's going to become even lower. So serviceability is really not going to be an issue. So they're actually looking at passing a 2.5% buffer in addition to the interest rate that you're looking at doing, which is going to mean that there's going to be a lot more people that are going to have a lot more ability to lend a lot more money and to be able to service those higher debt levels, which should stimulate that investment part of the market, which is great overall for us. So maybe the sellers are potentially biding their time around that, and obviously around the reductions in the interest rate is what we're feeling. This week on Friday, if you want to catch us live on Facebook and Instagram, we're going to talk about everything that you've ever wanted to know about pricing. So offers over, what does that mean? No price, with a price too high, how do you negotiate that? How do you make those approaches? So 3:30 to 4 Friday, tune in, and I'll talk to you soon.